It's midweek. Welcome to Business Incorporated, coming to you live from Lagos, Nigeria. Thank you for joining us. I'm Chimeze Obi Iwagu. On the program today, Chinese smartphone maker Huawei joins world permit in mobile money transfer deal for Africa. IMF team visits Mozambique after damming debt audit. Plus, Ghana's annual consumer price inflation falls to 12.1% in June from 12.6% the previous month. Let's get started now. We're beginning with the markets, and here in Africa, the markets are all looking mixed. However, the Nigerian stock market was actually trading flat at intraday, 0.00%. The market in South Africa was up 0.62%, and Egypt was trading lower, 0.05% at intraday. But Kenya was actually up 0.05% on Tuesday. In the Middle East, shares of retailers were the chief gainers in Saudi Arabia. The property sector helped Dubai and Qatar, was buoyed by blue chips such as Qatar National Bank. The Saudi index was up 0.80% at intraday as electronics seller United Electronics continued to rally in heavy trade as investors gained confidence in the company after it reported a near quadrupling in second quarter results. Its board recommended a cash dividend for the first time since 2015, and on comments by its chief executive to local media that it plans to expand its online footprint. Qatar's index was up 2.73% at intraday as 9 of the top 10 most valuable Qatari shares rose, with Qatar National Bank rising 1.2% and its pair Masraf Al Rayan gaining 2.5%. Qatar National Bank on Tuesday reported an almost 3.6% increase in second quarter net profit above analyst forecasts, helped by a drop in bad debt charges and lower staff costs. In Dubai, property developers pushed the index 1.59% higher, with the largest of them, MR Properties, adding 0.8%. Abu Dhabi's index was almost flat as shares of Dana Gas, the most traded shares on Wednesday morning, fell 1.5%. And in Europe, investors are digesting corporate earnings and looking ahead to comments from Federal Reserve Chair Janet Yellen. Let's cross over now to Frankfurt, where my colleague Janelle Dumalon is standing by to talk to us. Hello, Janelle. Thank you very much for joining us. U.S. Fed Chair Janet Yellen today begins her two-day quarterly congressional testimony. What in particular are the investors hoping to hear from Yellen?
Good afternoon. Good to talk to you today. Now, investors are expecting Yellen to say that the Fed is right on track in terms of shrinking its balance sheet and raising the interest rates. Now, the message that's been set up for the past few days is that employment in the U.S. is strong, job growth has been steady and is showing no sign of declining, and that in turn is enough to offset the other factors that don't seem that rosy, like anemic wage growth and core inflation that's weaker than expected. So basically, the market is starting to price in this narrative that 10 years after the financial crisis, the ultra-loose monetary policy that we had in place to combat that is no longer as needed as it once was.
Now, Janelle, the DAX behind you is trading sharply higher. Now, what company earnings are hitting the market today, and would any of these be a game changer?
European stocks are broadly higher. You are right about that. And one particular company that has surprised investors today is Burberry. Now, stocks are up after an unexpectedly strong showing in the company's quarter that ended at the end of June. And revenues were up 4%. That's twice what analysts expected on strong demand from China and strong domestic business. Now, I'm bringing this up, and this is interesting because that strong demand from China was mostly fueled fueled by a social media campaign where Burberry managed to triple the number of consumers that saw its marketing on WeChat. That's, of course, a Chinese messaging app. And that's interesting for the sector in general because these results are coming at a time where high-end brands and luxury retailers struggle to get on the digital train. And we know that in the world today, it's hard to just focus on high street sales. Burberry seems to have understood that, acted accordingly, and it's now gaining from it.
Now, aside from the earnings report you've just talked about, which asset class is giving the markets the most direction now? Bond yield spikes, swing in oil price, or tech stock gyrations?
Well, obviously, the answer to that is all of those things. But if I were to take it beyond today, I would say that the most fascinating market story for this year has generally been the tech stocks. It's amazing how the so-called FANG stocks, so Facebook, Amazon, Netflix, Google, how much higher they push the sector up depending on how well they're doing, and how much lower they push the entire sector downwards when they see sell-offs like we did in those two occasions in June. And of course, you also have newcomers like Snapchat, whose stock dipped below its IPO price, and we know that they've already lost, in the 4 months since their IPO, they've lost 10 billion in their market value. Now they're only at 31 billion as investors fear a massive sell-off at the end of the month when a lockup period that prohibits investors from selling some of the Snapchat stock expires. So tech stock is where things are exciting, and the market seems to feel that way as well.
Tech is it. Well, Janelle, thank you very much for your time. Hope to see you again tomorrow.